Last Tuesday, while being in America, we passed a small park next to the lake in Milwaukee. And in the park, workers were putting up flags. They had put up 10,000 flags, still had 17,000 flags more to plant in preparation of Memorial Day. That kind of dedication I really appreciate and honor, and hopefully we see the same in this podcast. You're listening to the StockInvest.us podcast, Trading Tips with Jim, as we're heading into week 22. And for the week, the big item, the ticket item of the week will be Nvidia, which will have quarter results on Wednesday, I believe. We'll get back to that in just a minute. As I said, I've been in America, and that was the reason there were no podcast last week. In the week before, I told you that markets are getting high, and a natural correction would and could be expected. And Nasdaq is doing that, going down from 18,000, was 19,000 something high, and currently sitting at 18,737 points after losing 2.47% last week. Dow Jones lost the exact same amount of percent, 2.47% down also for Dow Jones, sitting at 41,603 points. SP 500, Standard & Poor's 500 was down 2.6%. All of this total natural. You had a very strong correction upwards from 15,000. Actually, it was almost at 15,000 flat, all the way back up to over 19,000. A ride I really enjoyed. Personally, I am well suited into Nvidia. I used the chance Nvidia hit, I think maybe it was down to 84, 86, but I got it at $88. In the last huge tariff falls, when the tariffs were in the very beginning, the tariff talks was in the beginning, and I used, as I told you, the chance. This was, in my opinion, a super duper chance to get in cheaper into the market. And for having a low exposure, I increased my exposure almost to the top, enjoying this strong short-term upturn. The question, what is next? I have reduced. I told you I would do that. Go 2 podcasts back, and I told you I would start to reduce my exposure a little bit, because a small correction is natural. While many influencers and some, let's call them experts, are talking about a major crash, I'm not so sure about that. What seems to be likely to me, looking at the chart, is a further downturn in the very short window. Could be a few days, could be the full week, very hard to say, before Nasdaq again will hit a lot of support, and in my opinion should bounce up. Actually, that is my bet. I will not overinvest yet. I will not increase my investment. As I told you, I took a lot of profit as Nasdaq hit high again, and I have someone in the bank ready to use if there is a really good buy. And if the markets for some reason should tank, then I will buy. You can be very sure about that. Looking at the chart, fair chance that we can see 18,000, meaning that we should go quite much more down before we hit up again. At the same time, there is so much support just below today's level that it can be any time. But a little further downturn will not be very strange if it happens. What I really love is the volume. Volume has been following market upwards, now going down a lot. That indicates that most likely the downturn will be short. A few things, of course, can cause huge disruptions in the market, and these are mainly geopolitical. The tariff things, I wouldn't worry too much about it. As I told you, when these things happened, they were over-exaggerated by the media in Maine. This is negotiation tactics, and everything is slowly settling in the better terms for US, which in my opinion will give much better long-term results for the West. As such, US has a huge debt to handle, and it has to be handled in some way, and the ways you can do it is either let inflation run hard, which is an option, The other way is to increase your revenues, which I believe is the path that Trump and his team is on. Increasing revenues, reducing or holding taxes low. Stimulate the economy, make sure that you get more industry back to US. And being in US, I was hoping to see a lot of US cars, but was shocked to see how much Asian, especially Toyotas, driving around. Every second car was Toyota RAV, Toyota Vensis, Toyota Camry. It was Toyota everywhere. So it will be interesting to see if US can get back to be a strong car manufacturer and also see more growth of American cars domestically. These are the things that they are trying to settle. We are trying to settle the stock markets and the tradings. As I said, Nvidia will have quarter results. That will be on Wednesday. It's expected to swing only from our system 3.81%. Some think it can be a huge swing upward to 30% for Nvidia if they beat the market. The estimates is that the revenues will increase to 80 cents per share, up 38%. After being 58 cents last time. So the expectations is there for a strong growth for Nvidia, but more everyone will look into the results of what and the saying from the CEO about the future. They already leaked quite much details. Will I sell Nvidia now? Just take that futures profit, because if things go badly, Nvidia can also fall hard. No. I am very happy with the position I have in Nvidia. I will not sell my Nvidia shares. I think they are well suited. I took a little profit when it was very high, and that was enough. The rest I will stick with because I see more upside in Nvidia and the market as such. There will be more quarter results. Here are some of them. AutoZone will have quarter results tomorrow on Tuesday. The same will Okta and Box. None of these are expected to move really much. 4 or 5% is expected to swing either up and down during the next 24 hours after quarter results releases. Okta and Box. Okta is expected to go from a negative earnings to a positive earnings. That will be very interesting to see, while Box is expected to go from a positive to a negative, actually losing money for the quarter results. Wednesday was Nvidia, as I said, but another interesting company is C3AI, which is expected to swing almost 7% plus minus. But expecting to widen their losses to 60 cents negative per share. CRM will also have their quarter results. That's Salesforce, I believe. Not much expected in the movements for the stock. Thursday followed by Best Buy, Costco, Dell, Foot Locker and Ulta. And anyone following this podcast know that I bought Foot Locker a long time ago because it was, in my opinion, very, very undervalued. I used the chance, and last week or the week before, a bid came in for Foot Locker at $25 per share, or was it 25, which gave 80% increase in the stock price just over a few minutes. Still holding up there, and their quarter results is expected to come in with a loss going from 22 cents per share to minus 7 cents per share in earnings. Will it change the bid? Hard to say. Will I get out of Foot Locker? I might just take that very nice profit and get out of Foot Locker. Foot Locker used to be a very good dividend company, struggling a little bit to reshape their industry, shutting down a lot of shops that were not profitable, and they also had a huge loss. I think it was upwards to 10% from all the stealing that was allowed in US. But as I said, I was in US, and the mentality has totally changed. I don't think that we will see what we saw last 4 years with huge demonstrations, robbery in the streets, and shoplifting almost for free because there were no sentences or based on values less than, I'm not sure if it was $900 or something. Correct me if I'm wrong. Anyway, these things are absolutely changing, and I think some of these shops which had most of the shoplifting will see that revenue coming back. Ultra Beauty will also have quarter results on Thursday. Other than that, there will not be much. Jobless numbers will come on Thursday, and Q1 GDP revised will come. No big expecting to the revise of the GDP. Is expected to be minus 0.03, which was the last number, and revised is expected to come in at the same. I think actually it will come in a little better than expected. Friday will have some core inflation data, no big expectations to these things. So in general, it is last week's sentiment plus Nvidia, which will affect the entire market. The quarter season is coming to an end, and I saw 93% of all companies have released their quarter results, of the bigger companies that is, and in general they have increased their profits by 14.8 or 15% last year. Strong growth for most companies overall. We will see how it will continue. Oil at $62, gold $3,341. I believe gold will go down, but gold is holding steady up there, and it's all due to geopolitical uncertainty. That is the reason holding the gold up. And finally, now we see a lot of media focusing on US debt, but that is because of the Trump derangement syndrome. They have to try to pinpoint everything that is wrong, but the US debt, and I spoke about this for the last 5 years, has to be handled, and now it is absolutely a focus on it, and many say that, oh, now it will be really bad. That is reflected in the 10-year Treasury yield, which is 4.5, up from 4.3. So the debt is increasing in cost, and only interest rates cut can reduce that, alongside stronger belief in the market. The bill was settled last week, I believe, and it was said in the beginning, oh, this will shock and send the market down. It did not do that at all, and I don't believe it will send the market down, because it's way too early to say anything how these things will affect the markets. Over the coming months, we will have more steady information coming in, and these things will determine the real direction of the market. In the meantime, we can look at the buy and the sell signals and see what they say. And they are currently sitting across all the board at 26. For Nasdaq, it's 12. This is very low. And being this low, I warned about these things before. When they are very low, things can go rapidly. Shows increased volatility, so expect volatility, meaning that we can have brutal downs or strong ups. New York Stock Exchange at 17, London at 18, and Oslo at 27%. Frankfurt at 18%, National Stock Exchange of India all the way up at 51, very high. They had a long downturn, now they are picking up again. Tokyo 30 and Shenzhen 21. So what all this mean is that in general, buy signals are still very low. They are not showing an overbought market at all. Getting too low can cause a little panic. It's the greed and fear index, etc. But we are not there. To me, these numbers indicate a very stable market. I believe I went through most of it. I said in best and worst case scenario, I said that I think Nasdaq can go all the way up to 19,000 points, which it did. And the worst case scenario was that Nasdaq could go all the way down to 15,000. That was the best and the worst case scenario I had many weeks ago. And it turned out good. Nasdaq up at 19,000. So what is the best case scenario now, and what is the worst case scenario? Worst case scenario is that the geopolitical tension increases, especially around Middle East and again Ukraine. These things is not settled until we have paper signs. These things are absolutely not settled, and these things combined with general uncertainty in the market, if they just pick up badly, we can get in for a very strong fall. In this mix is also the trust to the US dollars, but I told you over the last 4 years, especially over the last 4 years, with the increase of debt, etc. I told you how Biden forced, moved, pushed, whatever name you want to use, pushed the East away from the West, causing them to work harder on BRICS and all of these things. And that has manifested absolutely. Now Trump is trying to create a bridge back to build back trust in the dollar, but that is very, very hard. You have to look at what happened in the past. So we have a system, a BRIC system, where they are trading together, but now Trump got Saudi Arabia back on the track, which can make sure that we have actually a global trade instead of spreading into two parts. But these things, the trust in the US dollars can get more headwind moving forward, because now, as I said, now they just have to find as much bad things to say. They will, of course, talk about debt when they should have done it the last 4 years. Especially because that is an absolute issue they have to handle. And the debt cost, as I mentioned over and over again, is the cost of the military and the healthcare in US. So it's insane how much they pay on their debt. It has to be handled some way. Hopefully it will not be handled by letting inflation run wild. Inflation eats debt, by the way. But there will be a lot of sorrow following an increase in inflation, which already has been very bad in most countries. So if the bad things happen, we can get into a very rapid fall. These things can come crashing all together at the same time. There is no guarantee for nothing. You are listening to a trading podcast, a stock podcast. The stock markets go up and down, and most people lose out because of FOMO. Fear of missing out. They buy too late and they sell too late, and you get into a lot of issues where you should have been much more long term. So how do I hedge? You heard me hedge into gold many years ago when I said all these things would happen with the Ukraine war, etc. I went into gold at $1,600. I sold out because I wanted to be in the stock market. Was very lucky with that trade as well. If gold falls enough, I will be back into gold, but still I will remain on the outside of gold. Gold is one good thing. You can be into dividend stocks, and that is one thing I really increased over the last few years, is getting into dividend stocks, because this hedges better against bad times. If we get any fall, be sure I will get deeper into solid dividend paying stocks. Yes, they may reduce their dividend a little bit, but in general, it's a good way, and there is other ways to get into it. By the way, I see a lot of things around Klarna and debt. So again, it is just a situation we have to handle about that. If you don't know Klarna is a Swedish company, one of the biggest Swedish companies there is, hailed for their rapid growth, where they offer services to any shops where you can use Klarna as payment and pay later. Sadly, it turns out that clients really are paying later, and that is a general problem across the board. Credit card delinquencies, etc. But it is just a symptom of 4 years of strong inflation growth. All of this you just start to use from your savings, and when your savings are gone, you start to use your credit cards. All of this gone. But I am a strong believer in inflation going down. We will know more about that on Friday, as I said. Main reason is because of energy prices going down. And happy to see US is finally, after being emptied the reserves, US is now filling up their oil reserves again. That will hold somewhat on the oil price. I would like to see the oil going a little further down, because that will also make sure that inflation remains low. By the way, am I optimistic about oil shares? I will get back. I am in freight, mostly cargo, but we'll get back into oil shares when things are better. I was in oil shares before they went up, because I saw the huge upside in oil with all the geopolitical issues, and it was such an obvious buy so many years ago. Went out of oil when oil was above 100, I started to reduce my oil shares. So now I'm only in cargo and logistics, if you wonder about that. We will just have to see. Expectations for the week ahead of us is that it will be volatile. It's more likely that it will go down than it will go up, but it can be a shortfall then up very brutal. We are just at that stage. In my opinion, we are seeing the forming of a much better market. Who will be right? I don't know. We trade accordingly. As I said, I put more money into dividend stocks to make sure that I get dividends, not worrying so much about the stock price and the dividends. I just reinvest, by the way. Last time and for quite some time, I'll be giving you 5 stocks with buy signals, and here is how that went. For week 20, I gave you 5 stocks. I gave you Ferrol, BioCryst, Monster Beverages, Coca-Cola, the European one, and Electronics Arts. And by the way, 2 of these also paid dividend during the same week. 3 of these went up for that week, where Ferrol did the best. They were up 4.76%. Monster Beverage up 1.9%. The loser was Electronic Art, which was down 1.17%. In average, the 5 stocks yielded up 1.17%. So 3 out of the 5 stocks went positive for the week. The idea is just that I'm only measuring. I don't have stop loss, no nothing. These are just stocks, I tell you. We watch them. I keep improving the system in hopes of finding a really good buy candidates. And I know many of you want to hear about potential stocks. I found 5 stocks for the week ahead of us. The idea is that, and I do buy some of them, not all of them. I do buy some of them. So this will be for Tuesday till Friday, where the idea is that, and to give you a perspective, so it's the open price on the Monday and the close on the Friday. So that's how we just measure these things. 5 stocks. Arcadia Pharmaceutical, currently sitting around $22, flashing buy signals. Then there is Mr. Cooper COOP, that's a financial stock, currently sitting around $129. It's Hawkins, also sitting around $128. It's chemicals. And then there is Woodward Aerospace, $210, and Li Auto, which also will have quarter results this week, currently sitting around $28.90 in the EV sectors. I will read the stocks again with the tickers so you can check them out. It's ACAD, which is Arcadia Pharmaceuticals. They have given a buy signals. It's Mr. Cooper, which is COOP. It is Hawkins, which is HWKN. Hawkins. It is Woodward, which is WWD. Woodward, which is the aerospace ticker. And then there is Li Auto, which is LI. These 5 stocks have given buy signals in my system, flashing buy signals, and we will follow them. And I will tell you how it went, if we are able to improve the system or not. And that makes for only one part left in the $1,000 challenge. That's the $1,000 challenge, where I try to grow $1,000 as fast as I can. Currently, it's sitting at $2,969.59. Yes, it's up, but it's not where we want it to be. I still sit in Nvidia. Nvidia had a bad week last. NIO had a bad week last week. Currently sitting at 382. And I believe it was the bid sales BYD reduced the car prices by 30%, pulling down most stocks. That being said, I also sit in Tesla. I took a huge portion of Tesla while Tesla was beaten many weeks ago. When market crashed, I bought into Tesla, and what an upturn in Tesla. I have an even bigger stake personally in NIO, because I believe in EV. Sitting deeply in Tesla and NIO makes for EVs for a huge part of my portfolio. May sound strange. When I was bashing EV cars so many years ago, I told you don't get out of it. NIO was some $60, and I said don't buy it now. I'm buying simply because I think that it is good opportunities in the EV sector in the long run. They are here to stay. And NIO is one of the biggest. Tesla is for sure the the bigger boy, and they are coming with robots, they are coming with self-driving taxis. There's a lot of things going on in Tesla, so yeah, I'm there, and I believe it will be see. How the year will turn out, I am truly anxious to know. I have it in the $1,000 challenge as well, because it was a good buy when it was bought at 510, but currently at 380, meaning that since I bought it in the $1,000 challenge, it's down 25%. May it turn this week, because now it starts to look a little foolish. We're supposed to grow this to 10,000 and later to 100,000, and we are far from that, currently only sitting just under $3,000. Next week you will know how it went, and the day I sell NIO I will post on the YouTube video when it is sold, because I might sell it, but currently it is such a good buy. I cannot find other stocks, in my opinion, which offers the same. Yeah, we could take a chance going into Dell on the quarter results or Lee on the quarter results, etc. But I will remain steady a little bit more. And the day I'm ready to change my mind, I will tell you first. Until next week, just have a super duper week. I hope, as usual, your portfolio will be much greener by the end of the week. Until then, bye.
Welcome to StockInvest.US Stock Analysis. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.US. By using the information you agree and are held liable for your own investment decisions.